Hi, welcome in the video. In this video we will discuss customer types and customer journeys. We'll discuss what are the different customer types and what are their needs. And we look at the different customer journeys and have a closer look to the details of the mortgage value chain. And during that discussion, we will look who are the actors in the value chain. But first of all, customer types. There are different customers for different mortgages. What type of customers do we distinguish? First of all, we have first-time buyers. Normally, first-time buyers are young people buying their first home. And then we have house movers, people moving from one house, selling the house to another house, and that's the house they buy. Normally they buy a bigger and more expensive house. However, what we see is that, especially for elderly people, sometimes they move to a smaller and cheaper house. Then we have refinancing people. People are refinancing when they stay in their house. They are not selling the house, but they only want to have another mortgage. Normally, they take a mortgage with a lower interest rate, so that will give them a cheaper mortgage than they have. A very special group customers are people who want to have equity release from their house. So they own a house, they have a very small mortgage, and they want to turn, let's say, the value of their house into cash, and that's to release the equity from their house. Normally, yes, they're elderly people who want to have an extra financial support for their pension. A very specific group is buy-to-let. Buy-to-let is for consumers who buy a second home, not for themselves, but for renting it to other people, and they want to generate an income from the rental business. Last but not least, of course, we have holiday home buyers, people who have their home to live in, but want to buy a second home for the holidays. And what we will see is that all those different customers, they have different needs, and we'll discuss one example. Here you see the difference between a first-time buyer and a house mover who's moving to a smaller house. The first-time buyer, they will have a mortgage with a high LTV, because first-time buyers in general don't have much savings, so they need a big and a high mortgage. House movers, especially if they move to a smaller house, are elderly people. They have some equity in their house, so normally their LTV will be low. First-time buyers, it's not relevant for old products. In the module about products, we explain what are old products and what are new products. Old products are products they were sold in let's say, at least 10 years ago. So if you're a first-time buyer, it's not relevant for you. But if you're a house mover and if you have already for 20-year mortgage, old products can be very relevant, and the application can contain one of those old savings products. Pension income. If you're a first-time buyer, maybe you're around 30 years old, and your pension income is not relevant, because the regulation in Holland says that you have to look at pension income if you're going to have a pension within 10 years after originating the mortgage. That is in general around 55 or 57 year old. 99% of the first-time buyers are definitely younger than 55. But for the older elderly house mover, it can be very important. Interest fixed periods. What we see is that first-time buyers go for extremely long interest fixed periods, 20 years, 25 years, or even 30 years. That's not the case for house movers. It's depending on the age and the history of the mortgage, but what we see is that those extreme long fixed periods are not that popular with the house movers. Let's now have a look at the value chain. On the left-hand side, you see the most important actors we have. The consumer, the broker, he gives the mortgage advice. The lender, that's the party that supplies the money. The notary is responsible for passing the deed. And we have a servicer who is servicing the loan. And the value chain starts with what we call orientation. Then we'll have mortgage advice done by the broker. After the mortgage advice, there will be a mortgage application, and we go into the underwriting and the origination process. Then we have a loan, and the loan has to be serviced. And if there are issues with the payment of the loan will get into special servicing. We'll now have a look at those steps one by one. First, origination. Orientation is for the customer to collect info about, okay, what is a mortgage, how does the process work, how much can I lend, etc. What will be the max mortgage, and what broker will I select. So if you look at the customer journeys, and they are mostly online, it's about, okay, what type of customer am I, what's the maximum mortgage amount, who is offering what in terms of interest rates, what type of mortgage advice is available in the market, can I get a special price, or can I do it online? Who are brokers, and what are the references of the brokers, and how do I find a very good and a well appreciated broker, and what lenders are in the market. So these types of questions will be answered during the orientation phase of the value chain. And if we have selected the broker, we need to collect data, because the broker needs data to give his advice. And after the advice, there is a step we call mediation. And mediation is selecting a lender which can fulfill the advice from the mortgage advisor. So the data has to be collected by the consumer and uploaded in the consumer portal. Sometimes we use what we call source data, and the customer has to agree to use that. Then the mortgage advisor produces his advice report, and it will be discussed with the consumer, and then a selection of a lender and a product is relevant. The alternative to mortgage advice is no advice, and if there is no advice, we call it execution only. In the acceptance phase, the application is with the lender. So based on the data in the application, the lender will assess the application, and if the application is conforming all the acceptance regulations, the lender will produce an interest letter. And the interest letter is produced to give the consumer a guarantee on the interest rate of the mortgage. After that, the real underwriting starts. So then the rest of the documents has to be collected and assessed, and if everything is okay, the lender will send what we call a binding offer, and the customer will sign the binding offer, and then there is an agreement. There's not a mortgage, because if you want to settle a mortgage, you have to go to the notary in the Netherlands. And that's the following step in the process. We have to complete the file, and we have to inform the notary who will pass the deed. You have to bear in mind that between signing the binding offer and passing the deed at the notary, there can be 2, 3, 4, or even 12 months. So there can be a big time gap between, let's say, signing the offer and really making the mortgage. If the mortgage is there when the deed has passed, the lender will activate the loan, and the mortgage will be registered with the land registry. If you have an active loan, then there is servicing, and the most important process in the servicing, of course, is the direct debit. And then we have what we call regular changes and non-planned changes. Regular changes are, for instance, an interest reset. If the consumer decides to have a 10-year fixed period, we will have an interest reset after 10 years. And of course, when the loan is at maturity, after 30 years, the loan will stop. There are more what we call non-planned changes, and they are initiated by the customer. For instance, extra repayment, a process which we call rentemiddelen. I would translate it as interest mixing, product changes, and let's say if there is a divorce, that can cause a lot of changes in the mortgage as well. And at the end, a total repayment will stop the mortgage. If you don't pay in time, you'll get into special servicing. And that has to do with debt collection, and fast reaction by the lender is important when a direct debit is cancelled. If there is a really issue with the customer, you have to set up what we call a repayment plan. And if the customer is not able to restore, to recover, then we'll have to foreclose the property. Foreclosure is done also at the notary. If the mortgage is not high enough to recover the debt, we'll end up with a residual debt. In Dutch law, the consumer is still responsible for a residual debt after the foreclosure of the property. You have to bear in mind that that is not the case in the US, where if there is a foreclosure from the property, there is also a full end. There is no residual debt, so all the debt is gone after the foreclosure. What we've seen in this module is that there are different types of customers, and they have different needs. That we have quite a complex and long mortgage value chain with different customer journeys. If you want to have more information about the value chain and the processes, there we have modules about the mid office and the back office, and I hope to see you soon at one of our online sessions.